Welcome to the Rick Hills Real Estate Show, trying to make sense of this crazy Arizona market. And this is the week that the Federal Reserve meets, and everybody's going to be on pins and needles seeing if they lower rates or not. But not everybody, and there's a reason for that. And to be honest with you, I don't think we're going to see things change much at all. But it gets a lot of attention in the press, in news articles, on social media. Central bank is meeting. Mortgage rates are going to come down. I'm going to kind of explain what's happening, and then we're going to take a deep dive into some of the numbers here in our market. But first, let's get right to the topic at hand, and that is mortgage rates. And here's an article by MarketWatch. It says mortgage rates don't follow the Fed's moves directly. Now, you've heard me say on this channel many times that it's baked into the cake, and here's why. Mortgage rates are not tied directly to the Fed's interest rate policy. The 30-year mortgage rate follows the yield on the 10-year Treasury note, which falls when investors see turbulence ahead for the U.S. economy. Turbulence could mean a few things. Financial markets worry if inflation runs too hot and consumer price too quickly, the Fed could raise interest rates. That would push the 10-year and, by extension, mortgage rates up. Markets also worry about unemployment. If more people are unemployed, the Fed may drop rates to try and meet its mandate of fostering full employment. That pushes the 10-year down. So it says here, for example, for instance, the 10-year fell briefly by 4%, below 4% on Thursday morning after jobless claims data was released. That drop, in turn, drove the 30-year mortgage rate down to the lowest level since October 2024 to 6.35. Now, that is a mortgage rate survey. So they survey, and it's done over a 5-day period, 5-day period. And so it doesn't necessarily mean that if you see something that says 6.29, that's the rate. Because if it went down on Friday, the survey ended on Thursday. If rates went down again on Friday, it wouldn't be reflected in that survey number. So they might be down to like 6.2. You just don't know. That's why you need to get with a mortgage broker and say, what's going on out there? But the important thing is that article is saying it's really not going to matter what the central bank decides when they get together on the 17th, whether or not they're going to go up or down. They're going to look at the dot plot. The dot plot is where the board governors are kind of saying where they think things are going to be in the future. That will give you a reaction from the bond market far more than anything that Chairman Powell says. They're going to be looking at the dot plot because they already are anticipating between a 0.25 reduction and a 0.50 reduction. That's already there. I like to call it just baked in the cake. So if you're sitting and you're wondering whether or not to lock or not, I'm no mortgage expert, but the consensus out there now says, lock. For those looking for a quicker drop, the narrowing spread between mortgage rates and 10-year Treasury yield might offer some hope, according to a recent Redfin report. The spread as of August 22nd was its lowest level in 3 years, with room to narrow further. A low spread tends to lower mortgage rates. So in the report, Redfin's head of economic research compared the spread to a restaurant meal, explaining the Treasury yield is the cost of raw ingredients, the mortgage rate's the price of the meal on the table, and the spread is the restaurant's markup, which covers the cost of the chef, rent on the restaurant, profit margin, and so on. Regardless of the cost of raw ingredients, if the restaurant has a lower markup, that lowers the customer's bill. Similarly, regardless of the Fed's action, a lower mortgage spread could lower rates. It summarizes and says, given that the spread is only one factor, most real estate economists are expecting a slow but steady improvement with snags along the way. The good news for buyers is the market no longer favors sellers to the extent that it did during the pandemic frenzy, noted Mark Fleming, chief economist. For those prospective buyers who've been waiting on the sidelines, housing market's finally starting to listen, Fleming said. Now, I get that. There is some improvement in mortgage rates, and it says that buyers are starting to pay attention and the market's starting to listen. Not so much. I think there's anticipation that we're going to see some improvement. And my 7-day moving average is showing this. That bright yellow mass there is the number of new contracts that spiked up. You have to ignore this part in the middle. That's Labor Day. So you always have to kick out these dips, which are holidays. Memorial Day, 4th of July, Labor Day. The main number I look at is the black line. It's the number of contracts. They're not going up. Buyers are not jumping back in. We're not seeing a big jump into the market. We're still sitting at 2,650 contracts over a 7-day period. Will that follow any increase in inventory? Because you're going to see more inventory coming on now in September and October. We always do. If there's anticipation that mortgage rates are going to continue to get lower, we'll see more listings. That's a given. Will that make buyers follow that? Well, we still have an affordability issue. So the number of buyers following that increase in inventory just because of lower rates might not be low enough to make that happen. So what we are seeing on our inventory is this: active listings kind of come up a little bit, not that much. They're going to come up a little bit more by about 500 homes the next time we look at this chart. Just based on what I showed you here, that's the gap between the two. If we're not putting that many under contract and more coming on, then this number's going to go up. It's not rocket science. The Cromford Demand Index and Supply Index updated for the 1st of September is showing, and I'm going to try and make this a little bit bigger here for you. It's showing here that, come on, mouse, you can cooperate with me. Showing here that supply is starting to come down and demand is starting to come up. Well, that was the 1st of September. The chart I just showed you is showing that that's not going to continue that way. So the gap between the two, which is like what I like to measure right here, if there's a gap, that's more pressure on the downside for pricing that you can see right here. That's what we saw in 2021. Look at demand was way down here. Their demand was way up here. Supply was way down there. This gap is what made prices accelerate. To the opposite extent, going back to 2006 and 7, look at what happened to supply. Demand fell off the roof and prices came crashing down because of poor lending practices. We've kind of beat that to death, haven't we? So where are we at with average list price? Well, this one might surprise you a little bit. Take a look at this. They've gone up. Why? Well, this is average list price. There's been more luxury homes put on the market. They do that after summer. Summer's over. Let's list this house if it's over $1 million. It raises the average price per square foot. This in no way means that people are raising their asking prices. Now, it varies. It varies by zip code. It varies by city. If you want a special report for your zip code, use this QR code right here or the link down below and tell me what you're looking for. I'll send it out to you. This is what's going on by city as far as the Cromford Market Index. And tomorrow morning, if you've got my newsletter, it comes out at 7 o'clock. Again, that link's down below. It's free. This will tell you what's going on by major city. You can see that Chandler's improved by 9%. They're at 128.6 versus 117.7. Mesa's finally up above 96. So this is a direct result of the fact that inventory was declining. These numbers will go the opposite way if inventory continues to go up and buyers are not following them. The cities of Buckeye and Maricopa continue to get hammered, with Maricopa all the way down to 47.6. They went down even further. Buckeye, 51.4. The outlying areas where all the building is, it's harder and harder to sell your home. The cumulative days on market have also continued to climb a little bit. And again, this is, I think, a direct result of listing during the summertime. And so you listed in June or July, you probably didn't get it sold until maybe the first part of September or last part of August. So you look here and we've got 88.3 days. This will start to come down as we get into September and October. So if you are thinking of listing your home, September, October seasonally for us is not necessarily a bad time, providing you're pricing it correctly. And I know a lot of you are struggling, saying, I listed my house, I dropped it by $40,000. I still didn't get any attention. Hate to tell you, it's only two things: price and presentation. They either don't like the price or they don't like the way the house looks. That's it. It's not more complicated than that. It gets harder when the sales activity is not as high as you would like it to see. Now, 2,650 homes over a 7-day period, that's pretty much a record low for us. So there are just not a lot of buyers out there. That doesn't mean that your home won't sell. There's some neighborhoods that are doing well, and I just showed a couple of them, Chandler being one. This here is our contract ratio, and you can see here that it's in what's called the cold market zone. So as far as houses going under contract, it's not warm and fuzzy. It's kind of chilly out there. This here is what I'm going to show you, the Cromford Market Index as a predictor of annual price appreciation. It shows historically here, notice this line that went down here and it just dove right down. Well, after it went down, you can see that prices decreased. Then the line started to go up a little bit. What year was that? 2009. Prices went up just a tad, and then they continued to go down as people were dumping their foreclosures and short sales. Then you saw right here the Cromford Index start to come up, and lo and behold, prices started to increase between 2011 and 2014. Muddled along, flat, 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 flat. Here came all the money getting printed, money getting thrown out there, dropped from helicopters. The Cromford Market Index went straight up. Then look at what happened to prices. Now, as the Cromford Market Index started to come down, in front of that, guess what? Lower prices, 2022, 2023. Where are we at now? Flat, but trending slightly higher. Does that mean prices will go up? No, because we still don't have it. The line is trending slightly higher, but as I showed you on the inventory, as the gap between the two grows a little bit farther, you're going to see that line start to come down a little bit. Best I can tell you is we're going to be flat to slightly lower going into the rest of the year. There's nothing between now and let's face it, the announcement on the 17th of where they're going with the rates, that's going to make rates either pop up a quarter point or down a quarter of a point. It's not going to be a major news flash that's going to change our Arizona market. It's just going to be news. We're going to go, oh, okay, so they went up a little. Oh, so they went down a little. It's going to be no big deal. An eighth of a point, maybe. That's not going to be a big deal on your payment. Here is these are called zip code market reports, 85048. That's kind of like down by Ahwatukee, I believe. It's showing active listings are 83. Last month they were 96, so that's green. It's always green when there's fewer listings. Then it shows the pending listings 18 to 16, listings under contract 34 to 35. So just kind of more of the same going on. Sales per year, 372, 376. Just tying exactly week after week to last year. So it's really not hard to predict where September and October is going to be. And again, if you want a zip code report just for your neighborhood, either click the QR code or click the link down below and I'll send it off to you. But it's an interesting time out there. And this week is going to be one that's going to be projecting that there's some big news coming. And I'm here to tell you, you're probably going to sleep through it. I won't. I'm going to wake up and see what's going on. If you have any questions, shoot me an email at rick@rickhelps.com, and I hope you have a great week. Take care.